This is our Expert Speak of the Week. Today we are discussing the tax-related questions that our viewers have been sending in to us. To help me do that, I am joined by the founder of Wealth Being Advisors, Amit Kukreja. Amit, thank you so much for joining us in the studio. Okay, so today we're discussing what capital gains is in when it comes to investing in property, buying or selling. Right. So before we get to the questions, can you quickly decode for us what exactly is capital gains tax, and how should you go about it?
See, anytime you hold a capital asset, there is a duration for which you hold the asset, beyond which when you try to liquidate the asset, in other words, you transfer the asset, any profit that you make out of it by holding the asset is actually subject to income tax. However, there are provisions where you can exempt from taxes the capital gains, which is basically the, in common terms, profit that you have made by holding the asset. Right. So I think the confusion keeps emerging from how do we avail the income tax benefits by selling the property and ensure that the tax liability is minimal when we sell, and what are the provisions of reinvesting so that obviously we minimize the tax liability. And there are several scenarios in real estate, and that confuses the people a lot.
Okay, so let's get to those scenarios. We have our first caller on the line, Amit Gulati. Hi Amit, what's your question?
Hi, my question is on the recent changes in Sector 54 of Income Tax Act, regarding capital gains in residential property. Okay. So assuming that I sell 2 residential properties and I still hold another one, am I allowed to reinvest the gains in 2 new properties, one against one, and therefore gain capital? So could you guide and advise me, because I'm not really clear on these guidelines.
Sure.
Okay. What's your
so Amit, what you can do is you can actually avail the income tax exemptions by selling the 2 properties by reinvesting the capital gains either into one property, or you can reinvest the 2 properties based on individual calculation. However, what you have to watch out for is, one, the capital gains is being reinvested in one property against one, or one against both of them. The other one is you have to ensure that the capital gains which is arising from selling the property is actually a completed property for which you have taken possession. The under construction property does not qualify as a property. It's a different capital asset, and it has its own tax provisions which are separate from a completed property.